After weeks of uncertainty, escalating tensions, and fears of a broader Middle East conflict, global markets exploded higher on Monday after the United States and Iran reached a breakthrough ceasefire agreement. And investors wasted no time reacting. U.S. stock futures surged before the opening bell, with Nasdaq futures leading the charge, jumping more than 2%. The S&P 500 and Dow Jones futures followed closely behind as traders celebrated what many hoped would be the beginning of a return to stability. The catalyst. Late Sunday, President Donald Trump announced that a ceasefire deal between the United States and Iran had been completed. The agreement reportedly includes a 60-day period of negotiations aimed at resolving major disputes, including Iran's nuclear program. A formal signing ceremony is expected later this week in Switzerland. Perhaps even more important for the global economy, plans are underway to reopen the Strait of Hormuz, one of the world's most critical oil shipping routes. For months, investors feared that disruptions in the region could send energy prices soaring. But after news of the deal broke, oil prices immediately tumbled. Brent crude fell sharply, while West Texas Intermediate crude dropped toward the $80 per barrel level. The sudden decline in oil prices sparked optimism across Wall Street. Lower energy costs could help ease inflation pressures that have weighed heavily on consumers, businesses, and central banks over the past several years. But that's where the story gets complicated. While traders celebrated the ceasefire, many analysts warned that the long-term outlook remains uncertain. The agreement may have stopped immediate hostilities, but several major questions remain unanswered. Will Iran's nuclear negotiations succeed? Will sanctions be permanently lifted? And can stability in the Strait of Hormuz actually last? These are the questions investors will be watching closely in the weeks ahead. Meanwhile, another surprise emerged from the markets. Gold prices surged despite the apparent easing of geopolitical tensions. Normally, peace agreements reduce demand for safe haven assets. However, many investors continue to view gold as protection against future uncertainty and lingering inflation risks. Public reaction has been equally divided. Some investors are calling the agreement a historic breakthrough that could prevent a larger conflict and support global economic growth. Others remain skeptical, arguing that the ceasefire is only temporary and that unresolved issues could quickly reignite tensions. Social media platforms lit up with debate as traders, analysts, and everyday investors tried to determine whether this rally marks the beginning of a new bull run, or simply a short-lived relief rally. Now all eyes turn to the Federal Reserve. With inflation still a major concern, policymakers face growing pressure to determine whether recent developments are enough to change the path of interest rates. Market expectations currently suggest the Fed will leave rates unchanged, but every word from officials this week could move markets dramatically. As the world watches diplomacy unfold, investors are left asking one crucial question. Is this the start of lasting peace and economic recovery, or just a temporary pause before the next chapter of uncertainty? One thing is certain. The coming weeks could shape the future of global markets, oil prices, inflation, and international relations for years to come.